Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode, the 90% Trap, Why Most Real Estate Investors Fail and How You Won't.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and today's episode, the 90% Trap, Why Most Real Estate Investors Fail and How You Won't. Today, I'm going to be discussing something that most people in real estate don't like to admit. Nearly 90% of new real estate investors fail. It's not just that they struggle or slow down. They outright quit. They lose money. They burn out. They never even get their first deal off the ground. But I have some good news. You're not failing because real estate no longer works. It's because most people are doing the wrong things in the wrong order with the wrong expectations. So in this episode, I'm going to break down some of the reasons new real estate investors fail. And more importantly, how you can avoid becoming part of the 90%. So let's get into it. First, unrealistic expectations. Many new investors think real estate investing is get rich quick. They see social media clips, they hear some slick sales guru say how they made $100K on one deal, they quit their job in just a couple months, and they had financial freedom by age 25. And they make people believe that this is normal. I will acknowledge that there are some investors who did all of the above. In fact, as I know some of them. They made a fortune on their first deal, were able to quit their job, and they had financial freedom by their 20s. But what you didn't hear and see are the mistakes that cost hundreds of thousands. How many had to work 2 jobs to raise capital and took years to achieve financial freedom. The deals that fell apart, the mistakes, the learning curve. Real estate investing is simple, but it's not easy. And if you expect instant success, you have unrealistic expectations. You're going to get frustrated fast. And frustrated people quit. This is why I started coaching real estate investors. To keep expectations realistic, teach fundamentals of sound real estate investing, and help ensure that investors become profitable so they can quit their job, achieve real financial freedom. Number 2, lack of education. Now, I don't mean you need to get an advanced college degree. You don't need a master's or a doctorate degree to invest in real estate. Fact is, I know very successful people who some have just high school degrees and some haven't even graduated high school. But you do need an understanding of what you're doing. Too many people jump in blind or with some YouTube advice. They don't know how to analyze a deal, knowing the numbers. They don't understand cash flow. They don't know their market. They don't even know what to focus on. So what happens? They pay too much, underestimate expenses, and end up losing money on their deals. And that experience alone is enough to push most people out of the game. Education doesn't mean becoming perfect at real estate investing, but it gives you knowledge and confidence. And confidence keeps you pressing forward. Third, overthinking. This is one of the sneaky little things that comes in because it feels like you're being productive. You're watching videos, you're reading books, you're listening to podcasts, just like this one. You may even take a course, but you never end up taking action. You keep waiting for the perfect deal, the perfect timing, the perfect set of circumstances, and that moment never comes. Meanwhile, the investors who are winning, they hire quality real estate investing coaches. They learn by doing. They're making small mistakes early and getting called out for them quickly by their coaches so that they can win big later. You don't need perfect action. You need consistent action. Number 4, a person's inability to manage finances. I blame the modern educational system for some of this. I am totally amazed at how little people graduating high school understand about economics, about finances, about managing simple things like a checkbook, understanding how interest works and how compounding interest works. It's just amazing to me where we're at with our modern education system. You would think that all the money we're throwing at our education system, that people graduating high school and people graduating college would have advanced knowledge about these areas. But it's not so. But a lot of new investors underestimate how important cash is because they haven't learned that cash is the lifeblood of every transaction. They go all in on one deal. They keep no reserves. They have no backup plan. And when something goes wrong, repair costs rise, structural issues develop, market changes, and suddenly they're in trouble. Real estate rewards planning and patience. The investors who survive are the ones who prepare for the things that go wrong, because they always do in a real estate deal, some kind of investment. It doesn't matter whether you're long-term holdings, short-term rentals, whether you're flipping or wholesaling, something can possibly go wrong. You need to be prepared. Number 5, trying to do everything alone. This can be a big one. New investors think they have it figured all out by themselves. They don't need a mentor. They don't need a network. They don't need any guidance. They don't know anything. And if they get in trouble, we'll just go watch another YouTube video. And that slows everything down. Or even worse, it leads to deal-destroying mistakes. Real estate really is about having a team, because it really is a team sport. Coaches, mentors, investor groups, contractors, agents, lenders, and property managers. The faster you build your network, the faster you grow. All right. So now that I've covered the why most investors don't succeed, let's turn this around. How do you avoid becoming part of the 90%? Here's the blueprint. Number 1, hire a qualified real estate investing coach. That's what I did. I did it later than I should have, and I paid the price for it. I have coaches in every area of my life now because I understand that they bring clarity and they also bring accountability to my real estate investing. But don't just go find the first coach. Find a coach who's got active experience. Find a coach who's actually investing themselves. Find somebody who can help you with this. They just haven't read a manual, read a book, and thought, hey, I can teach people how to do this. And then set realistic expectations. Understand this is not a guaranteed get-rich-quick game. Stay consistent, think long-term, and focus on building the business, not cashing quick returns. They're going to happen if you're in this game long enough, right? Number 2, invest in your education. Learn to know your numbers. Learn how to analyze deals. Get to know your market intimately. That's the thing that I see in the investor friends of mine who do this regularly. They know their numbers. They don't have to spend weeks analyzing a deal. They know their market. They know what their numbers need to be. They understand square footage. They understand repair costs. And because they know their market intimately, they can make decisions quickly. You don't need to know everything, but you need to know enough to make smart decisions. Rely on your coach. Put pressure on them. Have them help you evaluate and make sure you're doing the right deal. What are you paying them for? I mean, that's one of the things that they should do. They should help walk you through your first deal or two so that you're comfortable with where they're going. Not just speaking at you all the time and telling you how great they did on a deal. Find a coach who will work with you. Number 3, take action. Even imperfect action moves you forward. Don't expect your first deal to be perfect. That's okay. Start small and learn fast. Adjust. Progress beats perfection every time. Number 4, protect your downside. Always think in reserves. Always make conservative estimates with numbers. If the deal will only work in a perfect market, you have no plan then when the market changes. It isn't a good deal. You need to be able to have allowances. So instead of saying, if I buy this thing for this price, and I'll definitely sell it for this price, and it'll only cost this much to repair it, start to hedge. Say, okay, my acquisition cost, we'll say, is $300,000. Let's just say my acquisition cost is $310 instead. If I think I can sell this thing for $500, let's say that I can only sell it for $450. If I think my repairs and carrying costs are going to be $100,000, maybe I think that they're $120,000. Build some cushion into your deal. Number 5, surround yourself with the right people. Find mentors, connect with other investors, build relationships, because the right advice can save you months or even years of frustration. Let me conclude with this. If you're just starting out, or if you've been struggling, remember that you are not behind. You're just early in the process of becoming successful. Stay in the game, learn the lessons, and keep moving forward. That's all for this episode. If you found today's episode of value, be sure to subscribe, leave us a review, and share this with another investor who needs to hear it. Thank you for joining me on this episode of the Whitwam Wealth Real Estate Podcast. Be sure to check out our previous episodes related real estate investing topics. I'm glad you're part of our growing real estate investing community. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcasts, YouTube, or wherever you enjoy listening to podcasts. This is Scott Whitwam. Be sure to join me on our next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.